Hello friends. In this video, we'll talk about one of the important sectors in India, that is wires and cable sector. This sector has its application across industries, may it be construction, may it be defense, may it be IT. All of these different sectors do need application of wires and cables. If we talk about recent quarters, then we see that there has been a drop in margins for all the companies which are operating in this sector. As we can see that for KEI Industries, margin dropped from 10.4 to 9.7%. For VGuard, it sort of has increased from 8.1 to 8.5. For Havells, it dropped from 9.6 to 8.3. Similarly, for Polycab, from 14.4 to 11.5. And for RR Cable, it's 7.5 to 4.7. So, except VGuard, we observe that for almost all the other players, there has been a contraction in margin. And this is mainly due to the rise in prices of copper, which is one of the important raw material which these companies need, and that is one of the major reasons why there has been a drop in its margins. But most of the companies expect this margin to uh, again go up once the copper prices settles down. If we talk about individual companies, and Polycab is the market leader. It has a market cap of 1.12 lakh crores and a P ratio of 62. uh, Company has a good ROE and ROCE. And if we talk about company's profit growth, then we observe that profit growth has been good. Uh, May it be 5 or 10 years, sales growth has been 18% and 16%. Profit growth has been 28 and 34%. So, from the profit growth, it is clear that there has been an improvement in margin, at least in the long term. Though there was a drop in recent quarter, but still, by and large, company has been able to improve its margin, and the stock price has gone up in recent past also because of the expansion in PE. It has gone up to 62. There are companies which are operating in infra space which enjoys high PE ratio. Companies like Asian Paints, though the PE ratio has dropped, but the other companies like FMCG, those who are operating in FMEG, they do enjoy high premium in terms of their stock price. Uh, and Polycab, in that regard, doesn't look costly. Uh, if we look at company's technicals, then company stock price is trading near its resistance. It did take a resistance of around 7,600 and came down and took support near 6,200. It is again hovering near its resistance. We'll have to see if it stocks breaks out or it again shows a correction. Next quarterly results are something to watch out for. Next company in this space is KEI Industries. It has a market cap of 40,000 crores. So KEI is smaller than Polycab. It has a market cap half as that of Polycab, but has a comparable PE of 65 and also comparable sales and profit growth. So sales growth for KEI is 14% for last 5 years, and profit growth is 26%. So they do show similar profit and sales growth. However, ROE and ROC are lesser for KEI, uh, which is also an aspect to consider while comparing these two companies. If we talk about companies' technicals, then this particular stock is taking a trend line support. In the past, it had taken this support and stock price went up. It reached a high of 5,000 and then came down, but took again the support of its increasing trend line. Current stock price of 4,200 is still around 18% down from its all-time high. So even if it reaches to its all-time high, uh, then also it has a potential of giving returns of around 15%. So this is something which needs to be considered. While Polycab is near its all-time high, KEI is still uh, uh, below, around 15 to 18% below its all-time high. Next company which we'll see is RR Cable. RR Cable is having market cap of 15,000 crores, which is even smaller than KEI, and has a comparable P/E ratio. However, we need to consider that margin for RR Cable was lesser, but still company has shown a good sales and profit growth. In fact, sales growth is better than Polycab and KEI, and profit growth is comparable. So if RR Cable shows improvement in margin, then it has a potential to outperform other two companies. If we talk about technicals, then RR Cable is in fact trading near its support. Polycab, we observe that it was near its resistance, but it is trading at levels of 1400. It has a support near 1300, and it did reach high of around 1900, and is showing resistance near 1835 levels. So these are few levels which investors should watch out for. If it reaches to its all-time high, then it has potential of giving around 30% returns to investors. Next company is Havells. Havells has market cap of 1 lakh and 6,000 crores and has P higher than even Polycap and KEI. The reason for high P is because Havells also operates in FMEG. So FMEG, FMCG, these are domains which enjoys high P. If we talk about its sales growth, then sales growth is in low single digits, so as its profit growth. So compared to other companies working in this sector, Havells is showing lower sales and profit growth, and hence we can expect lower stock price performance also in near future. If we talk about its technicals, then it is clear from the technicals as well that stock price has not gained as much as it did for KEI and Polycab. 1600 is an important level. A stock did try and take a support of 1600. It reached all-time high of 2100. If stock price again came to the levels of 1600, then investors can look at a potential buying zone at this level, since it acted as a resistance earlier, and then stock showed a breakout, and then again took support near this level. So this is an important level which is to watch out for. Again, 2000 is also one of the important levels to watch out for. Next company is Dynamic Cables. This is the smallest company which we are analyzing. Stock has a market cap of 2,500 crores and a PE of 54. Uh, though the 5 year performance in terms of sales and profit is not pretty good, but it has shown a very good growth for last 3 years. Also, looking at its market cap, company does have potential to become big. India is a market which has a huge potential, and it does have space for multiple companies operating in this area. Uh, so even dynamic cable, even if it becomes as big as KEI, then it has a potential gain of around 20 times. So this is another company which should be on our radar. If we talk about company's technicals, then 900 level is an important level. Company did the company stocks did take support near that level and has gone up, but this stock is trading near its all-time high. So there is not a big margin of safety compared to other companies which we just saw. Also, a P of this company is comparable to other companies, Polycap, KEI, which is sort of a good sign. So even though stock is trading near its all-time high, but still its P ratio is not astronomically high, which is something which gives some sort of comfort to investors who are looking for buying opportunities. So these are the companies, friends, which we have analyzed. Please remember uh, to take advice of your investment advisors before taking a call to invest in any companies. We have made this video only for the educational purpose. Kindly do not consider it as an investment advice. Thank you.